Hey, what's up? It's Jeremy from Oxner Insurance with your WCW Blast. That's right, Work Comp Wednesday Blast. Because it is baseball and golf season. Well, there's some football, but I don't know. Anyway, WCW Blast. The topic today, folks, is Monopoly. Do you buy the blue properties? Do you buy the purple properties? Which properties do you buy in Monopoly? Actually, we're not talking about Monopoly, the fantastic game about real estate multiplication. Today, we're talking about monopolistic states. It's hard to say monopolistic when you bite your cheek, but monopolistic states for workers' compensation. What are those monopolistic states? North Dakota, Ohio, Washington, Wyoming. What does that mean if you are a business located in one of those four states? You have to buy your workers' compensation insurance from the state. You cannot buy your workers' compensation insurance from a private insurance company through a independent broker, of course. And what's one of the things that isn't available in those monopolistic states? That's right, employer's liability. Part 2, where you, the employer, if you get sued for unsafe work environments, that's what Part 2 covers you for. So what do? There's a gap if you don't have it in those states. You have to add it to your general liability policy. There's your tip. There's your trick. All right. So let's talk about a business that has employees, or employees are in the state consistent enough. Let's pick Washington, for example. So the employees are driving in from, I don't know, Montana, or flying in from Colorado. Business is domiciled in Colorado. Employees are consistently going to Washington for work every week. Or an employee lives in Washington. Colorado company must have purchased a policy from the Washington state organization. Pretty straightforward. So be careful if you're not a border state and you have employees traveling to a monopolistic state, because we're not talking about free parking anymore. We're talking about buying our workers' compensation insurance. And make sure that you're adding that gap for employer's liability, the second part of your workers' comp policy in normal states, if you're in a monopolistic state or you have workers in a monopolistic state. All right. So we've talked about the scenarios. The Colorado-based company, to summarize, with employees working in Washington, can still have a Colorado workers' comp policy for all the other employees that are not in or working in consistently a monopolistic state. So that gives you an advantage. Conversely, if you're in a monopolistic state, you're domiciled in Washington, and you have workers in Idaho, Nevada, etc., people that either live there or they're consistently traveling outside of Washington, then you can go to either the state funds, which we'll talk about next week, or you can go to a private insurance company through an independent broker, of course, like Oxner Insurance, to get your workers' compensation coverage for your employees outside of the monopolistic states. So that's your rundown with monopolistic states. If you're there, you got to buy it from the state. If you're outside and your workers are there or they live in the state, you got to buy the policy, at least for those workers in the state. It's a simple, change if you're domiciled outside of the monopolistic states and you're adding employees, say in Idaho or Wyoming or Nebraska from the Colorado example before. You just add those with the hazards to your private workers' comp policy and you're off and running. You do have to call the state, like I said, if you're working in the Washington or any of the monopolistic states. You have to call the state, buy the policy, give them all the hazards, etc., and then make sure you get your gap coverage as well. All right, so that's a wrap on WCW Wednesday. Thanks a lot, and here's to your success.